Welcome to the PlanStrongerTV market update for Wednesday, March 4th, 2026. I'm Anthony Hayes, in here as always with Mr. Robert Marr. Robert, good day.
Very good day so far.
Hey, very little to talk about today, but I think we would probably dab on what's on everybody's mind. Oil, and energy. So before we jump right into that, let's take a quick look at those 2025 numbers and have Kyle slide those 2026 right next to it. Seen a little bit more red up on the screen. Obviously, we've had a lot of information come across since Saturday. Plus, we had a little bit of adjustment in those jobs numbers from February. Robert, before we jump right into energy, how are these markets holding up overall?
Resilient. That's kind of the word I would use. So the attack started on Saturday. Markets weren't open, of course, Saturday, Sunday, Monday, and the futures markets for the weekend showing a low opening. And sure enough, Monday morning, very low opening for the markets. However, the S&P 500 ended Monday up 0.1%, and the NASDAQ closed, 0.4%. Only the Dow Jones fell 0.1%, and that was after a pretty horrific opening. Let's move on to Tuesday. Yesterday, everything was in the red. Small caps ended, I believe, about 1.7% down. In the morning, small caps were down well over 3%. The other three major indices, S&P, NASDAQ, and Dow Jones. The NASDAQ was down just over 1%. S&P ended down yesterday just under 1%. And the Dow Jones held up pretty well, down 0.8%, only 0.8%. And that was after, in the morning, all three of the major indices were down by more than 2%. So what does that tell? Let's look at the big picture. That tells me that there are a lot of dip buyers that, yes, what is happening in the Middle East and the war with Iran is impacting markets, but they're impacting markets. But when trading opens, a lot of buyers are kind of out, aside from yesterday, outweighing sellers. And the markets are saying, hey, as bad as this is, and not to minimize the destruction that's happening, as far as the markets are concerned, it's not as bad as many are hyping it up to be.
I know a lot of people are looking at there could be a lot of positive spins on this. Can we get some stabilization if Iran works out well, Venezuela works out well? 50% of the world's oil supply suddenly is not having so much craziness going on with the thing. So I know we had that 18 cent at the pump on Monday, massive jump, pulls back Tuesday a little bit. So what must happen in this conflict, though, with Iran right now to kind of neutralize and stop these costs from rising so quickly?
Yeah. So, Tony, you mentioned that, the gas prices spiked up, but then came back down. WTI, West Texas Intermediate crude oil, did get up to $78 per barrel, but now it's trading just over 74. And I know, myself included, if one were to say, how far do you think crude oil would jump, the initial shock, I probably would have said maybe into the 80s. I know a lot of other people were 90s, 100s, but the fact that we didn't even breach 80 at the start of it is quite telling. But in terms of your question of what needs to happen for energy markets, oil specifically, crude oil, and natural gas and others to kind of stabilize and come down, two things need to happen. One thing which is definitely happening is that the complete annihilation of Iran's drones, cruise missiles, ballistic missiles, launch capabilities, manufacturing capabilities. They've retaliated. We've had some hits on U.S. embassies and oil refining facilities. I believe one was either in Qatar or Bahrain or United Arab Emirates. But the second thing that must happen, and now this is not the goal of the United States, it's a goal to eliminate that regime that was in place, and Israel and the United States they have already done that, but is to put into place or have the Iranian people put into place new leadership that is amenable to friendly cooperation and ties with the Western world. If that happens, I think President Trump probably unilaterally remove the oil embargo and the trade embargoes on Iran, and that would do wonderful things for the markets and for Iran, Iran's economy, Iran's people, Iran's currency. But again, that leadership that is at least open to ties with the West and stabilization and normalization of ties needs to happen.
Yeah, we both see the same news, and clearly the United States is positioning itself to be able to start making oil a more friendly trade across the globe. I mean, we're an exporter when it comes down to it with oil. We'd like Iran, Venezuela to be able to, put into that world's oil supply freely. Better trade all the way. So how should investors right now be treating this? How are they positioning themselves? Any major changes they need to make? Is there a doomsday timetable on things that we're looking at right now or no?
Yeah, so, to take one step back, I mean, what we say in this 5-10 minute, episode here is, doesn't give this entire conflict justice, of course, especially when it comes to the energy trade. But for investors, remember that there was a lot of volatility and uncertainty surrounding energy because of that thing that we are not talking about today, the 2 letters AI, huge energy consumption, the data centers. In fact, it got to the point where President Trump says, hey, Magnificent Seven, the tech companies, since you will be literally profiting from the use of AI to sell to the consumer base, below your flow, it's you're responsible for
building the infrastructure
and paying for the energy to power the infrastructure and everything. So that's just one thing for investors to keep in mind. So even before the conflict broke out on Saturday, we already had discussions around energy and powering the data centers for AI expansion. But in terms of, to investors, if you are in a mostly equity portfolio and the conflict and volatility is kind of keeping you up at night, by all means, adjust your portfolio. But one thing I would definitely caution and urge investors, from what we said at the beginning, Tony, with Monday, futures down, and then 2 out of 3 ended up in the green. Yesterday, over 2 and 3% in the red. They ended up barely 1% down. Stay invested. In fact, if you're, a lot of our viewers, they're working, they're contributing to 401ks. Please don't ask, have your money that's contributed every 2 weeks or every month into your 401k to go into the money market, because you want the rest to be sitting in cash. As the markets go down, invest that money by the dip. Can something horrible happen in the next few days or the next few weeks? Of course, we can never tell. But even if the markets even go down further, buy the dip, because we never know when it's going to come up. If a leadership structure materializes in Iran that is amenable to the West, the oil embargo, oil sanctions, trade sanctions are removed, you better believe the markets are going to have words can't describe a bounce up from where they are now. So, the most important thing, stay invested, just stay invested. And if you need to reduce volatility or reduce your access to equities, then by all means do so. Fixed income, a little bit of cash, but definitely not going all into cash, no.
So diversification always seems to be at the end of the day, if you're diversified, you're getting a little piece of all these markets. Any timetable you're thinking about when gas prices might adjust? We see you still driving the big truck. You haven't traded in for a Tesla yet. So.
Not yet. But as far as prices, no, I don't have any final thoughts on those, on gas prices specifically. But a few final thoughts I do have is, when you put the numbers up, we saw non-US up, just over, actually exactly 5.5% year to date. They were close to 10%. They had a horrible day yesterday. I told you small caps were down at 1 point over 3%. International stocks ended the day about 4.5% down. So emerging markets and non-US, horrible day yesterday. But again, diversification, because they're still doing very well. Bonds, everybody's worried about inflation shock with rising energy prices, as they should be. But from what we saw, little price decrease, meaning a little increase in yields, but not anything that, the fearmongers would have had you believe. So, and then the final thought is, I hear on the news, oh my gosh, the expansion of the conflict in the Middle East. Yeah, but Jordan, Saudi Arabia, Qatar, United Arab Emirates, Bahrain, they're all going against Iran and saying, stop sending cruise missiles our way. We have the right to defend ourselves. And they're allying themselves closer to Iran, which is a promising development for the United States and Israel.
Well, we've been in this fight with them for 47 years. A lot of them have been in the fight with them for 20 plus years. But speaking of 20 years, as we close today, Robert and I just want to give an extra special congratulations and thank you to our creative director, Christina. She always makes us look good up here, and she's been making Holland look great for 20 years. So thanks so much, Christina. On behalf of Robert and I, she is helping us help you plan stronger.